Good morning, everyone. This is Abid Khan, and you are watching Karachians Academy YouTube channel. We have started a series of past papers solution, and we have selected AS level accounting paper 9706, paper 1 of MCQ based paper 1, and its version 2. We have selected latest attempt of May June 2022. So let's move on to question number 1. Which accounting concept states the revenue can only be recognized after it has been earned? So you know well, this is the revenue recognition, and we know revenue is recognized when it is earned. This is the revenue recognition. So consistency, no. Going concern is something different. Organization will run for a longer time and for unforeseeable period. Money measurement, no. So your answer is realizations. When sales realized, then it is this is the realization concept, that you only recognize the sales when it is earned, right? Revenue you can only recognize when it is earned. Question number 2. A sole trader has changed the method of depreciating his machinery. Fine. From the reducing balance, okay, fine, this was reducing balance method in year 1 to straight line method in year 2. In year 2 of trading, the same percentage of depreciation is used in both cases. We know well that straight line method charges the depreciation, a constant amount of the depreciation over the life of the assets. So over the life it remains constant, no change in the yearly depreciation, right? The total amount remain very much constant. But in reducing balance method, what we do, we work this out based on reducing balance. So in initial years, on the total cost, initial cost, the depreciation is charged, then the depreciation is deducted, and net book value, it becomes your base for depreciation for the next year. So then you apply a depreciation rate on the reduced value, net book value, and this goes on, right? So what is the difference in reducing balance method? We charges the higher depreciation in the initial year, and with the as long as the life of the asset passes and we move in future, so the depreciation amount year by year, it is on decrease side, so it is decreasing. So this is what the difference between both. So in initial year, in year first, on cost, so depreciation will remain constant. But if from reducing balance, if the sole trader has been on the on reducing balance method, as per previous practice, the depreciation would have been a lesser amount. But if it is, as it is changing the depreciation method to straight line, so ultimately that will be a higher amount, because in reducing balance method, the second year would have been a lesser amount. So we can say, so what is the effect of the, what is the effect on the, let me see, so what is the effect on the book value of the machinery, okay, net book value and the profit. So when it is switching from reducing to straight line, so the depreciation would be more, so ultimately its profit will be low. So profit low, and the book value will also be low, because higher depreciation would be charged there. So your answer will be D. Now come to question number, hope this is clear to you. Now come to question number 3. What question number 3 says? What question 3 says? Paul has a year end of 31st December. Fine. On 1st January 2020, he bought a non-current asset of $10,000. He sold it in January 2021. Means after 1 year, he sold it out. And at what price? At $8,500. It was purchased in 10,000 and 1 year depreciation, and then the book value should be measured with compared with 8,500. So, so what has happened? Paul usually provides depreciation at the rate of 10% per annum. A full year depreciation is charged in the year of acquisition and none in the year of disposal. So when it is selling it out or disposing it off in 2021, as per the policy, so no depreciation, right? So only there will be a depreciation of 1 year, because in second year, as per company policy, there you will not be charging any depreciation. He forgot to provide for any depreciation on this non-current asset. So what he has made mistake in year first in 2020, he was to charge depreciation at 10%, but he forgot to charge, right? So what is the question? What was the effect of this error on Paul's profit? This was a mistake. What was the, so we option A, B, C and D, higher, lower, the profit will be higher by 1,000, lower by 1,000 or 1,500. This is showing. So we can do one thing. So this is very easy one, easy question. If the correct one and the wrong one, we should see, and the difference in profit. So what is the cost? Cost was 10,000 and 10,000, and depreciation 20 depreciation. This is 10% of 10,000 is 1,000. If correctly, if he would have done it, so the net book value should have been 9,000. If correctly he would have done it, so net correct value. But he unfortunately he forgot. So he took the net book value at 10,000, right? So and then he sold for, he disposed of and sold in 8,500. So what he is showing here, so 10,000 is a net book value and he is selling in 8,000 as per is wrong calculation. What he is showing? He is showing 8,500 and 10,000 and 1,500 of loss. Due to his mistake, his books are showing 1,500 of the loss. But what would have been? Would have been 8,500 if he is deducted correctly. So the loss would have been 9,000 was the net book value, and he has sold in 8,500. So he is making a loss of 5,500, but his books are showing a loss of 1,500. Means his books are showing loss by increase a higher loss of 1,000, and higher loss of 1,000 has the impact of lowering its profit by 1,000, right? So 1,000 lower profit. So your option number B would be your answer. Hope this is clear. So let's move on to question number 4. So question number 4, let's move on to question number 4. Right. A business depreciate its machinery at 10% per annum using the straight line method. Method is straight line on month by month basis. Fine. Right. The business financial year end 30th of June. So machinery which had cost 6,600 on 1st April 2020. So the cost was okay. See one thing, in June, June is closing. So from 1st April till 30th of June, so till 30th of June in 2020, how many years? April, May, June. So 3 months, okay, and was sold on 30th of June. So 30th of June, from July to June, 12 months, and then from July to November, 5 months. So total 17 months. So total 17 months in second year. So 17 plus 3 months this and 17 months this. So 20 months this has been in your business. And then it was sold on 30th of, the profit on sale was 350 and you earned. And when you earn, when you earn the profit, when you sell more than the book value. If your asset is of 9,000 and you are selling in 10,000, above the book value, if you are selling, then it will be, so above the book value, then you will be making a profit on sale. So he is making 350 of the profit. It means he is selling more than the net book value. We can see this. This is very easy. If we see the depreciation, the cost is 6,600. Cost is 6,600 less depreciation for 20 months. So the depreciation is on 6,600, 10%. If you take 6,600 and 10%, so this will be 660. So this is 660 for 12 months. You have to work out for 20 months. So 20 months you work out, then this will be, let me have my calculator. Very quickly we have to do it, because 660 by 12 and then 20. The total depreciation is 1,100. So its net book value is 5,500. And sold for how much? No issue. How much he has earned? He has earned profit. He has earned profit of 350. So 350 he has made. It means his net book value was 5,500. So it has sold 350 more over the 5,500. It means 5,500 was cost, net book value. So he added some profit and then he sold in 5,850. So when he sold in 5,850, then he earned a profit of 350. So what will be your answer? Your answer will be 585. So he was asking what was the profit on which, what were the sale proceed. So sale proceed, this was your sale proceed. Option number 3. Move on to question number 5. Okay, what question number 5 says? Why does a business maintain sales and purchase ledger control accounts? as part of the double entry uh, as a part of the double entry accounting system. And we know well, very know well, because these purchase ledger control account or sales ledger control account, or you can say account receivable control account or account payable control account, the same different name of the same thing. So why we maintain them in the general ledger, and in the these control accounts, all the figures comes from the original books of prime entry. The total figures comes from the 5 books of prime entries. The total figures, not individual, but the individual figures are recorded in the subsidiary ledger, which is called the sales ledger or purchase ledger, or we call it the customer accounts, or creditors account, or the debtors account, customers account or ledger, or supplier accounts ledger. So we maintain the individual entries in the subsidiary ledger, right, and the total entries we record in the control account. So the purpose of the control account is that if there is any mistake in the subsidiary ledgers, you can control and you can deduct that error or that mistake from the control account. So the purpose of the control account is to, number one, maintain the accuracy of the subsidiary ledgers, ensure, number one. Number two, if someone who is maintaining the subsidiary ledgers, and if he is involved, he gets involved in any fraudulent activity, or so you can easily means you can catch the fraud, and you can easily catch him, right? So this is the way what is the sales and the purpose of sales control account purpose, either sales and or purchase both. Number one, it allows a trial balance to be prepared easily from the nominal ledger, right? Because you cannot make trial and we know the trial ledger, what is the process of making a trial ledger, and we know the books of prime entry, the total goes to general ledger, and then general ledger, then we make trial balance, and then from trial balance we make the financial statements. So this is the whole process. So all total entries goes from here, nothing goes from the subsidiary ledger. So it allows trial balance to be prepared easily from, so this is right. It can involve separate employees, which makes fraud more difficult. Yes, this is what I have explained. There is no need to keep sales and purchase, no, this is wrong. So there is no need to reconcile personal account, no, this is wrong. You have to reconcile the personal account because you have to maintain a business. So 1 and 2, this, so your answer is A. Now move on to the next question. Let me, what is some explanation? Okay, this is some explanation which I have given you in question number 7. So you can see all our videos on this past papers from our channel, and if you have facing any difficulty or any problem, you can contact us and you can send your comments. We will try to quickly respond you, right? So only these 6 questions were remaining, the rest of the paper is done. So question number 6, the last one. So we will, the Doe received his business bank statement. He got a bank statement. He updated the cash book and prepared. This is very important point. He updated the cash book. Means those direct entries in the bank statement, like bank charges, direct deposits, and what do you say, standing instructions, all these which entries bank directly do, means like, and the business does not know about them. So he already, though he has compared his bank cash book with his bank book with the bank statement, and those missing information he has already recorded there, means he has corrected his book from the in compliance with the bank statement. What was recorded in the bank statement and missing in the cash book, he has already done that. So he has updated the cash book. So prepared the bank and then he prepared the bank record. When he has updated the cash book, so it means nothing is reconciling item except of those the checks we have issued and have not yet been paid by the bank, because they are not appeared in the bank. Number one, they would be in outstanding. Number two, if we have deposited some checks, right, we got from, so it takes there is a time lag, so 3 days, 4 days, right? So the bank will not credit your your check which you have lodged with the bank until it gets money from the your customer's bank. So these two items will remain outstanding. So let's come which items appeared on the bank. He has prepared the bank reconciliation. So which items? Number one, if we see the bank charges, he has paid the reconciliation. So which item appeared on the bank reconciliation? On the bank reconciliation, will this appear? Number one, bank charges. Based on the bank charges, if say he's saying no, bank charges will not appear. So, and it is saying yes. So number one, the yes is wrong. This is wrong. So based on yes is wrong because he has already updated his statement. So the option C and D you can ignore because charges have already, you have updated the cash book, so there is no need. So these two options are there. Number one, customers payments direct. If direct payments, customers payments by direct deposits. So it has already appeared in the bank statement, right? So and you already have updated. I said you already have updated your statement. So what is deposited in the bank or paid in the bank, you are paid by the bank directly, you already have corrected them. So this will not appear. So with this you can say no, this option has already gone. So this is not applicable. So no bank charges, no customer payments, uncredited checks. Yes, these are the checks which you receive from your customer and you deposit into the bank, but due to time lag, 3 days or 4 days, they did not appear in the bank, but you record them in your cash book. So the answer would be A. So guys, we have done with the this complete paper. In the previous videos, I have already done from 7 to 30 questions. You can refer to our channel, and 1 to 6 I have done today. So we have finished A levels, AS level paper 1 MCQ based paper. We have done for my latest attempt May June 2022, right? If you have any comments or any clarification, you can write to us and we will try to respond to your queries and your questions, your clarification and your doubts. So that's all for today, and thank you very much and bye for now.